Well, every home buying purchase is not going to go smooth. There are going to be some different situations that pop up, some different scenarios, maybe some unique scenarios that pop up. So maybe you have a debt to income ratio event, or maybe the type of house that you're trying to buy is a little bit different, or you had a recent credit event. There are a lot of different scenarios that you could come across, but there are solutions. And today we're going to discuss what those are with Bill Litton. Hello, welcome in. This is the Smart Mortgage Show. I am Ben George. He's Bill Litton, Regional President at Cross Country Mortgage. You can find him online at smartmortgageshow.com. Bill, how are we?
Hey, doing pretty good, Ben. Doing good. Just, preparing for the holidays and preparing for 2025.
I love it. I love it. I know this is another conversation, kind of like almost piggybacking off our last video about, alternative income, I guess, lending solutions that are out there. This is a little bit of kind of that same line, some unique scenarios that people come across. And I'm sure that while you do have a lot of straightforward, I'm a couple looking to buy my first home. There are a lot of unique scenarios that come across your desk there across country, right?
Yeah. And, I think that there's probably a lot of unique scenarios that come across most mortgage lenders' desks. But what I would say is, in our specific case, we try to get them all done. We're very solution oriented. So, our last video, Ben, was about like unique income situations. And this is just more unique buying situations, not just based on income, but based on other unique factors.
Okay, very good. As we go through this again today, remember you can log on smartmortgageshow.com. That is the best way to get in touch with Bill, but you can also call right now at 484-352-4151. So let's just jump into some of these unique scenarios, Bill, and I'm curious kind of how you work through them, because you shared some good stories on our last video, just kind of some examples of times when this pops up, because, someone that doesn't see this every day, there might not be something to me that immediately pops up, but I'm curious what some of these scenarios look like.
So the biggest one that we see is you live in this house here and you're trying to buy this house here, but you're being told you need to sell this house before you buy this house, right?
Yeah.
And that might work for some families, but a lot of times it's, if I sell this house first and I haven't found the new house over here, where am I going to go? Right? Maybe some people could stay with family. I know a lot of people don't like doing that. Maybe you could rent, but then you'd move twice, right? There's expenses that would be involved with that. So it's basically, how do we make it work so you could, buy this new house before you've sold the old house? That is, so it's kind of buy before you sell is what we would call that. And buy now, sell later is officially what I like to refer to that as. And so basically, how do we find the funds to close if they're locked up in your current house because you haven't sold it yet, so you haven't taken the profit from the sale? Also, can your debt to income ratio carry the old house and the new house and all your other expenses? So now you have a mortgage on the existing house, the new mortgage, car payments, student loans, credit cards. This is what we like to, help figure out as these puzzles almost, where it's how do we accomplish that goal? Because what a lot of people want to do is buy the new house before they've sold the old house. And that way they can have a really smooth transition between both houses. I'll tell you, and we do this as well, but people that sell their house at 9 a.m. and buy the new house at 10 a.m., they come to settlement very disheveled and almost shell-shocked looking. I mean, it's an event. So usually somebody who's buying their second house might do that, but people buying their third and fourth house, they want that privilege and that comfort of being able to buy now and sell later.
Yeah, I guess that's probably a very common scenario. I know I've thought about that as well. Whenever we decide to move from our home, is what's that process going to look like? Do I need to have more kind of saved now to help with that down payment to kind of give us a little bit of flexibility with getting out of our current home, or even maybe opening up that opportunity to rent it? Who knows? But yeah, that's a unique situation for sure. What else is out there that you come across that someone might connect with?
So one of the other scenarios that we see a lot is condominiums. Okay. So Fannie Mae, Freddie Mac, FHA, your main conduits, your main sources for mortgages, the main underwriters, underwrite probably somewhere around like 85% of all loans go through those, but they're kind of strict on condos. The condominium has to meet a lot of requirements. If it does not, then it becomes what's called a non-warrantable condo. Means that, Fannie Mae, Freddie Mac, they won't insure it. They won't insure the loan because, a condo is, and some of these situations, you as the home buyer, the eventual homeowner, when you're buying a new house, though, you might want to be really careful because a condominium project, as we call them, it's its own little economy. And if it's mishandled, if there's misrepresentation, if there's malpractice, if there's malfeasance, that can cause all kinds of problems. And, a poorly run condo community will severely affect the values of the property. They won't increase with the rest of the market. They may even decrease. Fannie Mae, Freddie Mac, FHA has seen enough of these scenarios where they're super particular. But there are scenarios where maybe there's one thing that's just not quite Fannie Mae approved, but it's a great community. Historically, values have increased and it meets the buyer's needs. We want to help you to be able to still buy in that community. So we have some loans that will absolutely. So this non-warrantable condo loan is not going to approve a condo that's in complete disrepair, right? Where the condo association has done a very poor job, but it will allow for one or two inconsistencies to allow you to still get into that community. That's a good community. It's well run. It just doesn't meet all the Fannie Freddie guides.
Okay, another good example. I know we teased it a little bit at the top of the video, but there are some, I guess, credit events that pop up. I mean, all the time we run into different situations. So I guess what are some of those that you see most often and how do you work around a credit event?
Yeah, so look, Fannie Mae, Freddie Mac, FHA, main conduit for most loans, but they're really strict on, foreclosure, bankruptcy, short sale. So mortgage lates, if you've been delinquent on your mortgage, they can be very tough on that. So we've got a lot of programs that if we call it a near miss, like it's just outside Fannie Freddie, that program can still help you to buy a house if you have the mortgage lates. In fact, we have a couple of programs that are much more lenient on foreclosure. Now, these products, they want to take a holistic look at the scenario, right? So as in like our last video, they're probably not going to allow us to do an asset qualifier loan where we show no income in conjunction with somebody who's a week out of a foreclosure, right? Now, in subprime, back in 2008 and before, you could do that all day long. So these loans, again, they are not a subprime loan, but for the person who they had a recent credit event like a foreclosure, a bankruptcy, or a short sale, the income's strong, the credit has rebounded, they're going to put a decent amount of money down. They meet all the other criteria. It misses in that one area, we can help them.
Very good. I know it's all about finding solutions. It's not a no necessarily. It's about trying to find the answer to when you can make these things happen. And for these different scenarios, Bill, that come across, are people aware that they're unique when they come in to meet with you? Like, hey, this is a little bit out of the ordinary, or do they come in oftentimes maybe erring on the side of, oh man, I don't know if this situation's anything Bill's ever seen or cross country's ever come across before? How do they typically enter your office and meet you for the first time?
Yeah, so sometimes it's how would the customer know that they're like if they're buying a condo and they would have no idea that there's even this whole condo review and underwriting process, right? So sometimes they come in and we don't know about the condo. We always, when we're helping someone to buy a condo, we like to educate up front and say, as a person buying a condo, this is what you need to look out for. There could be issues. It might be non-warrantable. If it is, and it's lendable, we'll find an option for you. So that's the first person that they don't even know there could be a problem. But we do get a lot of people that come in where they've talked to a couple lenders. They were already turned down. We had it happen a couple of weeks ago. Somebody came in under contract. They their contract was ready to fall through because the financing fell through. It took us a couple days to figure it out, but we did, and we got them back on track with this type of lending. So that was somebody who, tried elsewhere and failed and came to us, and we were able to put it together.
All right. So I guess this is kind of where that initial 15-minute consultation comes into play, right? Where you kind of sit down and start learning about the different scenarios, or kind of get a better overall picture of someone's financial situation and some of the challenges they might be working through, right?
That's it. We go through a process of discovery, and we ask a lot of questions. We learn a lot. And then based on what we find out, we try and match you with the lender. And in some cases, look, it's any lender will lend to you. So it's just, we have 100 lenders. Let's find the best interest rate. In other scenarios, it's a very unique scenario, and we only have a few investors, but let's see if we can find the lender or the investor that has an appetite for your specific criteria.
All right, again, best place to start is by calling 484-352-4151 or log on smartmortgageshow.com. Again, all this will be in the show notes as well, so you can get the contact info there. If you have enjoyed this video, please subscribe to the channel. We appreciate your support. We'd love to hear from you. Drop a comment or reach out if you have a question specific to maybe a scenario you're working through, or a home that you're looking for, or maybe you just want to get more information on rates. Whatever it might be, we'd love to hear from you. And Bill, as always, we appreciate your time.
Thank you so much. Always here to help.
Well, for Bill Litton, Regional President at Cross Country Mortgage, I am Ben George. Thanks for being a part of the Smart Mortgage Show. We'll talk to you next time. This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.